In this episode, we speak with Mark Dzialga, the founder and managing partner of Brighton Park Capital, a growth equity investment firm focused on entrepreneur-led growth stage software, healthcare, and tech-enabled services companies. Brighton Park Capital invests in companies that provide highly innovative solutions in partnership with great management teams. The firm brings purpose-built, value-add capabilities that match the unique requirements of each of its companies to build market-leading products and to execute the needed strategies to create important global companies. Prior to starting Brighton Park Capital, Mark was a managing director at General Atlantic for more than 20 years. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Mark, thanks so much for taking the time to chat with us today. It's a delight to be with you.
Thank you for having me, RJ. I really appreciate it.
So as I was preparing for this interview, obviously there's one burning question that was on my mind I'd like to start with was, you clearly had a very good run at General Atlantic. You achieved, a certain degree of success in your career. Why decide to start a new firm?
A question that I'm often asked. I would say I had, an amazing run at General Atlantic. It's a very special place. And I owe so much to them in terms of their willingness to give, me the chance to be in the investment business, coming from an investment banking background. And I had always wanted to do something entrepreneurial. And, the guy who was running General Atlantic, who still is running it, Bill Ford, he's such an amazing person and he wanted to keep running it. And so I knew that wasn't going to be an option. And yet I still felt like I had a lot of energy and I'd always wanted to try to start something. I'd worked with so many great entrepreneurs over the years. And I always felt like, some of the best investors, are just like the entrepreneurs that we invest in. And I also saw this opportunity in the growth equity ecosystem that I thought a lot of other firms had walked away from. If I look at the kind of companies I used to invest in when I started at General Atlantic, there were kind of these $20 to $60 million software companies that were doing something very disruptive and very innovative. And yet, as people like GA and TA and Summit and Warburg and Insight, as they started to raise these much larger funds, all of a sudden, kind of the writing the checks of the $30 to $100 million, wasn't necessarily in the sweet spot of what they wanted to do. And I felt like there was a bit of a void in that particular part of the market. And then if I could start an investment firm that was focused on, that part of the market, and there was a bunch of other things we wanted to do differently, it would be an interesting opportunity. So that was a little bit of the genesis, behind it.
And given that you probably had a lot of just muscle memory in terms of how do you build a team, how do you identify deals, how do you work with prospective CEOs who can become, partners with you, was it fairly smooth to set up the firm? Tell us about that experience.
I'd say 6 years later, I sort of convinced myself it was smooth, but there was a lot of commotion in the water in the early days. And I also say it was very humbling, right? Because, the first office we had was this tiny, we were in a co-working space in Greenwich, Connecticut. We had a dining room size table and there were 4 or 5 of us. And, I'd gone from this beautiful office on Park Avenue at General Atlantic to this fold-up desk and lousy chair that I'm sitting in the back office of Greenwich now. So it was humbling. And I think on muscle memory, one of the things I'd say is there were a bunch of things we said we wanted to bring from our prior experiences, but there was a lot of things we said, hey, we're going to do it differently. And I think that was a bit of the advantage of a clean sheet of paper. And we made a pretty conscious set of decisions to say, hey, there's a bunch of things, let's not do it the same way we had in the past. Let's change the way we do things. So some of the examples of that is, we said we're going to do a very small number of investments every year. We're only going to have partners sit on the boards of 2 or 3 companies. We're really going to give the entrepreneurs our time, effort, and energy in what we do. When I was at GA, people are sitting on 8, 9, 10, 11, 12 boards. You'll see a lot of these other firms, venture firms, we hear guys all the time sitting on 15, 20, 25 boards. So there's a lot of things like that we wanted to do differently.
The talent coming out of either undergrad or investment banking or other growth equity firms, it seems like they're looking for something beyond just, okay, here's another growth equity or private equity firm to work with. They want more from the experience. And I'm curious, like when you were thinking about setting up the culture and what you wanted the firm to be like, were there elements that you took from GA and Goldman Sachs that are still with you? And then are there new elements that you wanted to layer on top?
Yeah. Yeah, it's the biggest one we wanted to take with us. And we're a bit of a melting pot. We have people from GA and TCV and Summit and New Mountain and Berkshire and Great Hill and so many of the great other growth firms, Thoma Bravo. And one of the things we've always said is, look, what does everybody experience at their firms that we think we should bring to Brighton Park? And right at the top of the list, I think, was we wanted to be a firm that were just great people to be in business with. I hate to say this, RJ, but it's probably not much of a secret. But at the end of the day, the first thing a great entrepreneur says is like, do I want to be in business with this person? And, these things are absolutely like marriages. They are intensely intimate relationships. And, ultimately a great executive, great entrepreneur is going to pick somebody that they say, hey, I can learn a lot from this person. This person has real empathy. This person has scar tissue. This person is going to give me time, effort, and energy when I need it. They're not going to be distracted by a lot of other things. And I think we just wanted to be good people to be in business with. And the downside of it is there's so many people who are in our business that are difficult and prove to be difficult, when you hit a bump in the road. And I think we always try to say, we're not going to be like that. So that's one thing we tried to bring. And then the second thing I'd say is we really wanted to bring operating acumen to the companies. And, I fast forward to the future of what the growth equity ecosystem will look like. And I think it's going to be laden with a lot more people with operating backgrounds versus professional investor backgrounds. And one of the best things we did is we got our partner, Mike Gregoire, to be one of the founders. Mike had ran most of PeopleSoft. He had run another big HR software company called Taleo. And then he had just sold CA Technologies to Broadcom. And he had run very large software companies. And, Mike really brought this operating acumen and operating set of experiences to our investment approach and to working with the companies. And we really tried to build a lot more behind that. And I think that's an important part of what we now have at Brighton Park.
Mm-hmm. I'd like to touch on another thing about starting a firm. And we get the privilege to talk to a lot of firm founders, and they come with a wide variety of backgrounds. Some are, could be fairly early on in their careers. They spin out, maybe they're principal partner level at a firm and they spin out and they raise a fund. And then others are very seasoned, and have become very successful. I had a conversation with a CEO the other day, and I asked him why he chose the firm he chose to partner with. And he paused. It was a long pause, and it was palpable, how he felt about the people he partnered with. They were seasoned, they had been around the block multiple times. And you could tell that he really felt strongly about his partnership. And on the flip side, sometimes you get the younger folks, they're so focused on those fund returns that maybe they lose sight of the spending time with the CEOs. Is there something you could share with us, maybe insights that you learned along the way, maybe coming up as an investor?
I think one of the most important things that teaches you so many things is when you lose money on a couple of investments. I think it is almost a necessary evil to becoming a good investor. And, we went through a period of time, between 2010, 2011, and 2021, where, like, if you think about it, just about everything you invested in, generally you did pretty well. And I can remember, both when I was at GA and now, you were working alongside a lot of young people that had never gone through an economic pullback. It had been a kind of up and to the right, as the cloud momentum built for enterprise software, that kind of everything you invested in generally did okay. And, I was working with so many guys and gals that had never lost money on an investment. And then they start to, believe everything they see. We can do this, we can do that. I always say losing money on one or two things is actually very formative in terms of, what it does for you to stay grounded and stay focused on the opportunity. And then the second thing I'd say, which I always think is so important to entrepreneurs, is ultimately this is about building great product. And I think where we always try to index uniquely high is bringing a great set of product perspectives. When all these companies we invest in, they have one or two products and they're thinking about the third, fourth, fifth product, and helping them do, the market research, the validation, the competitive framework to say, here is our views on what the third, fourth, fifth product should be, so that you're not doing too much but you're also picking the right ones to focus on. And, how does it fit into the ecosystem? How do you really differentiate it? How do you price it? How do you package it? And I think that's one of the areas we tend to spend a tremendous amount of time with people trying to be a good partner in and around what they're doing.
Yeah, and we like to talk about value creation or value enhancement. I think every firm brings to bear their own set of capabilities. Is there an example that you could point to where you felt that your team showed up particularly well for a certain portfolio company?
Yeah, no, there's a couple of good ones, including one that just was very nice to see today. We recently invested in a penetration testing software company called Portswigger. It's a company in the UK. It was kind of a product-led growth company. Their entire book of business or book of revenue was sort of inbound to them, primarily people buying on a credit card, their pen testing software. And when we invested in the company, I think one of the thesis alongside the founder was to build a proper enterprise capability. First, to build an enterprise-grade product, and then to build a series of channel and enterprise selling capability in what they were doing. And I think it was one of the key reasons why the founder picked us, because we came with that thesis. And I think he had always thought that was the right thing to go. And I think we helped validate what he believed to be the opportunity. And we helped build the team, the product, the strategy to get all that in place. His team did a wonderful job in doing that. And it just manifested itself today with a really important customer win and partnership with SAP, which is one of the largest software companies in the world. And I think a good example of one that probably a couple of years ago, they couldn't imagine that type of relationship or that size of win with that kind of company. And so, that's a great example. Another one would be we invested in another observability software company called CoreLogics, and we helped them win a very important relationship with IBM to be sort of the observability backbone for a lot of what IBM does with its customers. And again, another great example. They had a wonderful product. They didn't have a relationship in place. It was a quantum of relationship they probably couldn't have imagined. It was the largest deal the company had ever done. And, our partner, Mike, played, I think, a pivotal role in first his connectivity tissue with IBM, but also to make sure we had an enterprise-grade ready product for what IBM wanted to use it for and how it worked with its underlying customer. So that'd be another good example of, kind of getting the product right, and then helping them connect and sort of maybe have the courage to take on that kind of relationship, which was a very substantial, like the SAP relationship, a very substantial relationship. So I think those are good examples of both the product and go to market in the context of some specific company. And there's lots of other examples like that, I think kind of fit in that genre.
When we think about the sectors that you're focused on and maybe the various technologies and products, is there one area in particular that you're excited about? And, maybe as part of that, how do you think AI will play into how you approach opportunities?
So I'd say one thing we were pretty fortunate to land on when we started 6 years ago is the most important fact pattern we were trying to invest on was using software to automate business process. And if you look at all the investments we did in Fund 1 and many of them that we've done in Fund 2, that was the underlying thesis, which is, today we'll call it agentic AI, but this was sort of the precursor. It was a lot of machine learning type capability where it was software that was used to automate a business process, a digital transformation opportunity of a single process or a series of business processes to just make it better within an enterprise. So an example of that was a company called Paradox, which was one of the original AI chatbots that helps large enterprises hire people faster. So take a company like a McDonald's, who across all of their franchisees is hiring, thousands of people a day, a very antiquated paper-based process. These guys said you can do it through a chat application where people can just give its information through a chat algorithm. We can determine whether this person has the experience and the flexibility to work the hours we need them to work. We get them scheduled for the interview. Once they decide to hire them, we can do all the onboarding. And so, this is all stuff that people were doing through paper and emails and, super time intensive, long time period of time to hire somebody. And they compressed it, from 35 days down to 3 days. And, that is a classic sort of automation opportunities. And they were on the front end of doing that in an AI enabled way. So as we look forward, I'm very excited about the agentic AI opportunity. I think it is going to be the next great opportunity to drive a further level of automation of business process. And that's so much of what a software does, is sort of just steps into what people are spending their time doing and drives the automation agenda. And the second big area we're spending a lot of time is just de novo AI software companies that are building from the ground up an AI-led product. And I think there's going to be tremendous disruption there where they're going to, displace a lot of incumbents, by using things like natural language query to do a lot more of what an underlying piece of software will want to do. So great stuff all around on both those categories.
We're coming up on the tail end, but before my last two questions, tell us about the benefits of cold plunging.
Yeah. I was in this morning, being in there for 10 minutes at 42 degrees this morning, so longer than usual. But I've been doing it for a while now, and it's definitely been transformative, especially as I've gotten a little bit older. But look, the big obvious benefit is it takes the inflammation out. I work out every morning, and, sort of the knees, shoulders, elbows get a little stiffer. It does a lot to sort of bring down the inflammation. It is the equivalent of 5 cups of coffee in terms of just the energy level. And the endorphin it sort of brings out in you to kind of get the body going. So, I don't need any other stimulant to sort of get me going in the morning. And it also, I just think it increases your metabolism. I find I eat a lot less and a lot better just because your system's pretty revved up. So, for me, it's not for everybody, but 5, 6, 7 minutes every morning, kind of starts. And now, when I travel and I don't have it, I'm not quite the same in the day. So I don't know if I could find a portable one, that would be even a bit better.
Where do you have it? Is it outside or inside?
Yeah, I have it outside. And the only downside is it's tough to be in there when it's raining, so like I will go in if it's raining when you're getting dumped on, but no, it's good. It's quality thinking time as well. You're pretty focused when you're in there freezing, but it's good.
Excellent. And you're not afraid you're going to pass out?
No, I was the first maybe 10 days I do it. I would only do it if my wife was sitting there to make sure I didn't pass out. Because the first time you go in, you're big time hyperventilating. So you do want to do it with somebody next to you the first time you do it, because it would be very easy to pass out. Yes, you got to be careful.
All right, last two questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, I'm going to give you 2 people. So get a little bit on the personal side, but it's something when we interview people, we really try to get to the bottom of. But when I was 8 years old, my dad died, and I'm one of 5 siblings. And when my dad died, my mom was 32 or 33, and she had obviously 5 children between 3 and 10, and she only had a high school education. And she was an amazing person. I mean, she was working 2 jobs. She went back to college to get her degree, and she literally sacrificed everything to raise her children. She had no other focus in her life other than raising her children and making sure we were taken care of. And, the amount of hard work and discipline and focus she put into everything she did. And when we came to go to college, she said, wherever you want to go to college, I don't know how I'm going to afford it, but we'll find a way to make it work. And she borrowed a lot of money to, let us go to school where we want. And I think that level of discipline, focus, willingness to grind it out under very extraordinarily difficult circumstances had a massive impact on how I sort of approached everything. And, when I got to college, I worked my ass off and I had great grades and, was lucky enough to get into business school. When I was there, I worked my ass off. And, every job I've had, I started at Goldman. I was working 7 days a week till 2 a.m. And, I was going to do whatever it took to be successful. And so I attribute a lot of that, to my mom. And then the second person is my wife, Kirsten. I've been married for more than 25 years. I met Kirsten at Goldman Sachs, and, she's been a great life partner and mother. We have 3 great children, but she's a great investor. She is super high EQ. She's an amazing sounding board for everything we're doing at Brighton Park. I always say to people, if you want to know what's going on at Brighton Park, you should ask her, not me. You'll get the real version of it. And I found her to be a great person when I've got challenges, opportunities to think through, to be able to have somebody like that to bounce it off and get a high quality response. I mean, and she was that way, when I was at General Atlantic and now at Brighton Park. So those are 2 that have been massively positively influential.
Excellent. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah, so there's many we've been involved in over the years, but I'd say one that's been super important to both myself and Kirsten is we started a program at Duke University where my wife went. And the background to it was I've always felt that we desperately need more women in the investment business. And we started a program there for the undergraduate called the Dzialga Women in Finance. And it's run by the chair of the economics department at Duke. And they bring a group of women into the program every year. And there's a special set of curriculum. They get them through to kind of train them for jobs in investment banking and in the private equity business and venture capital business. And then we work very hard to get them summer internships so that they will have a real opportunity to pursue something in the investment management business when they graduate. And it's been a phenomenally successful program. It's put so many women who I don't think otherwise would have known about the opportunities in venture capital and private equity and investment banking to become very familiar with it. And we love supporting the program, and the people who look after Duke are phenomenal people, and it's been a great success. And I hope it'll be a precursor for other people to do this at the undergraduate level to get more women into what we do.
That's fantastic. Well, Mark, I want to thank you again for taking the time. This has been a wonderful conversation.
Thank you, RJ. Appreciate you having me.